guys, this is Migs from Market Open. I wanted to go over some of the rules that I have written down and kind of perfected over the past year or so. I actually have these rules written down and posted in front of me, so it reminds me every single day not to break my rules. Breaking my rules has its own consequences. Depends on how really hardcore you are and serious about getting good at trading stocks. So some of these rules might not necessarily pertain to you, but I kind of wanted to share some of the rules that I use nowadays. Perhaps you can add them to yours, and you can start making your own. I was able to kind of narrow down my statistics because I wrote down all of my trades over a certain period of time, and I was able to notice a certain pattern with certain types of stocks that I would trade, certain patterns that I would trade, and what would work best for me and kind of fit my personality. Also, if you guys get the gold member reference, kudos to you. All right, so these are in no particular order too, by the way. There's no more significance of number 1 and rule number 6 or 7. So the first one is no trading new patterns. So I have a series of about 9 patterns that I trade every single day. Those are patterns that I am confident in, that I've tested, back tested forever in different variations. So I have very good data backing up those patterns. Those are the ones that I trade, and I don't try to venture too much out of that box. So if I'm going to venture out of that box, I'll maybe test it with a demo, but I won't be trading it with live money since I'm not so sure on it. The next one is I don't trade 5-cent tickers or stocks that are in a 5-cent tick program. So what that means is that the bid and the ask spread are they're in difference by 5 cents. So if you were to buy a stock, let's just say at the breakout of $20, you would have to buy it at $20.05, and you would automatically be down 5 cents because the next person is trying to buy it at $20. So it's kind of hard for me to be able to manage risk on 5-cent ticker stocks. So most of the times I will not trade them. I'll just completely just throw them away, take them off my watch list if I notice that they're in the 5-cent tick program. It's just I have not had good luck with them. So statistically, I just don't do well with them. So I definitely added those to my do not trade list. Now, number 3 is only allowed to trade with the trend. So this is a screenshot of Snapchat the other day. It was gapping up. So what I mean by trend is if it's gapping up, then obviously the trend is up. So I'm only allowed to long it until further notice. You can see that that's in quotations right here. I mean, I know patterns that are against the trend, but you have better odds trying to trade with the trend. So let's just say that even if a monkey clicks the button, you have a 50-50 shot. Now, if you're trading with the trend, you can add another 5 to 10%, and you have better odds of going with the trend. So now you're at 60-40. Now let's just say that the market keeps pushing higher and higher. Now you're at 65, 70, 75% of being able to score and do well on the trade. So that's one of the reasons why I trade with the trend. So one of the things that we like to say in the room all the time is the trend is your friend, and that stands very true with stocks that are gapping up or gapping down. Next one is 1,000 shares only on whole number scalps. So I basically trade between 100 to 500 shares. I trade large cap stocks, so you don't necessarily have to have a large amount of shares like with stocks under $10. Now, when I deem something to be perfect and kind of being held up, either support or resistance at a whole number, I will take a full size of 1,000 shares. But a lot of the times I'll end up scalping it or holding it as long as I can. But that's something I don't want to cover now. But for something to be perfect, I would have to do 1,000 shares. But on regularly, I'm trading between 100 to 500 shares. So now if something is a slow mover and perhaps I need to buy 2,000, 3,000 shares, I'm probably just going to throw that one out. I don't want to have to put that much capital into something, and I max myself out to 1,000 shares. Now, next, this is something I've never really had a problem doing, but I just wanted to put it on here to reinforce it because I see so many people doing this all the time. I actually saw this on HMNY the other day. People really thought that HMNY was going to go through 40 and 50, but it's just they were beginner investors and they didn't really know what they were doing. I tried to warn them, and the next day it gapped down about $5 to $10. So they basically lost all the money that they put into it. So they definitely lost a significant amount. But in a situation like that, that's something where you want to cut your losses, and instead of just buying more shares and hoping it comes back up, this is basically what you're doing. You are just preparing yourself, and you're going to fall completely off that tree and bust your ass. I've seen it happen so many times. Just it's a good rule to have. Just accept your loss, accept you were wrong, and don't average down your position. Do not add. Now, another rule that I have is the last one. Is I don't trade stocks under $10. So this used to be me basically. I thought they're huge percent gainers and stocks are ripping left and right with low floats and 1,000%. I've noticed that people that throw up those percentage signs are always saying that because it sounds a lot better than it really is. Because if a stock moves up 1,000%, but it's 2 cents, who cares? If you buy a stock that is $100 and it moves 3, 4, 500 or $3, $4, and you have 100 shares, it's the same if you buy 1,000 shares of something that's $3, and it moves 30, 40, 50 cents. So you're basically doing exactly the same thing. It's just on a safer stock that doesn't drop. I like to call stocks that are under $10 basically the Wild West, because a lot of those guys, a lot of people that are trading those stocks do not have rules, and they don't really necessarily know what they're doing. People that start out trading penny stocks and small cap stocks, the majority of them are relatively new. So now I try to stick with stocks that are over $10 because they're traded by institutional traders. They have rules. They're not written down, but they have their own set of rules, and all you have to do is learn those rules, and you'll be able to trade along with them just like the best of them. So if you have the rules already written down and you know how professional traders trade, and they are 80% of the market, of all the money moving around in the market, why would you not stick with that edge? So that's the reason why I trade stocks over $10. Now, leave down in the comment below if you have any other rules, or if you've written or started writing down any of your rules that I might not have or I didn't cover on here, or perhaps something that can help you out in the future. As always, like, subscribe this video, and I'll talk to you guys next time.